Come on!
Welcome back to the floor of the CME Group here. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in their overnight cash management. Today's Fat Tuesday, March 8th. And guess what, folks? The Bulls are down on Bourbon Street partying and letting the good times roll. They are getting beads tossed everywhere. We saw a pretty wicked move with S&P. It looked like it wanted to turn down this morning, and they've rallied. The Dow's currently up about 150 points. So we'll see how this Fat Tuesday ends up for the Bulls. But right now, they are letting the good times roll. You know, I think this market is running hot right now. We're seeing the extreme volatility that's come in. We saw the spike in oil, obviously. We're seeing the spike in the VIX, and I think that is being translated into severe moves. So we're in 1% swings up and down, and today we're seeing the 1% move to the upside. So we'll see how this pans out, because these headwinds we have talked about for weeks and weeks, even months, are still there. You know, the Portugal, the Ireland, the Greece, that's kind of re-emerging right now. So we'll see how the sovereign debt issue comes up. But right now, all eyes are on oil. Everyone's trading on oil. So we'll see where that goes. You know, but the lack of clarity, you know, is going to produce this whipsaw market. So you have to learn how to trade these markets, folks. Do not get stubborn. Go with them, ride the wave, and let the good times roll. So let's drill down these treasuries. You know, the 50-day, I've been tweeting this, and you can get me at my Twitter, @TheKiller, but I've been tweeting this 118.21. It's been a 50-day moving average. It's been a nice average for us here, as well as the weekly pivot at 119.13. Tremendous pivot. Hope you incorporate that into your trading strategies. You know, there's two more auctions this week after today. Clearly, today is a 3-year auction, and we saw the way a typical auction is, folks. People come in and sell these treasuries across the complex, hoping that the Fed sells the low tick, and typically, sorry to say, Uncle Ben, but you typically do sell the low tick. S&P, you know, last week I referenced it would be a pinball in between this 1318 and this 1308 level, and it has. I mean, wow, we really saw this overnight move up to 18, down to 8, and now we just made some new highs up at 1322.75. So the levels I think we have to play until we get out of this range are the downside 50-day moving average at 1296.50 and the upside 1327. That was an unemployment low which we tested so many times and we rejected yesterday. So we'll see if that level gets violated today. You know, I think the SPOO is just being reactionary, folks, to oil again. It's all about the oil. And the euro currency, you know, obviously the ECB is very clear. They will raise rates. That is no doubt about it. So we're actually seeing a little bit of a retracement today. It's almost down a penny. So we'll see how that works out. But, you know, I think they're just reacting to the weak dollar. And obviously last time we saw the euro currency up here at 142 came off 11 cents. So enjoy your Fat Tuesday. Let the good times roll. Remember, from the floor of the CME Group, be the hammer, not the nail.